Most day traders still blow their prop firm accounts. When day trading seems a lot easier using a prop firm, it's still a very difficult task to maintain and keep a funded prop firm account. So I'm going to give you 4 reasons why most day traders still blow their prop firm accounts, even though they're not using their own money, and it might seem like an easier task to use a prop firm. Keep in mind, these are just from my experiences. It's just some data that I collected from myself using prop firms and the journey that I went through in maintaining and keeping a prop firm account. The first reason most day traders blow their prop firm accounts is incorrect position sizing. They tend to get into too large position sizes that are just too big for their account size. Like if you get into a 50K funded account, say on Top Step, well, that 50K account only has a $3,000 maximum drawdown before you lose the account. So some people will hop in and choose to put on 1, 2, 3 mini contracts instead of micros, and then the account's blown in literally 2 days. Whereas if they would have traded micros, they could have slowly built up that cushion in the account to pass the combine and then get into that funded account and still trade the micros, trying to build up that cushion a little bit before trying to scale up. If these traders are trading the NASDAQ, then it's just even more riskier because the NASDAQ can move 20, 30, 40 points in a matter of seconds. And one mini contract on the NASDAQ on a 20-point move would be a $400 trade, win or lose. And so when you have, say, a daily maximum loss in these 50K combines or XFAs or funded accounts, whatever you want to call them, you have $1,000 daily drawdown. And so that can go immediately, right? That's a 50-point move on the NASDAQ. And like I said, the NASDAQ can move 25 points in a matter of minutes, maybe even seconds if we're in like a news event. So when you're trading these 50K combines or these 50K express funded accounts, use micros, right? There's no shame in using micros. You can still have a very good day using micros. I know people making $400, $500,000, $2,000 days trading micros alone because they allow for larger risk parameters on the NASDAQ, so to speak, because you can allow the NASDAQ to pull back 20, 30 points against you before it actually runs in your favor. And then you get the direction right and you can add on to that winning position. So don't be afraid to size down accordingly to your account size. I'll say you're trading a $150,000 account that has a $4,500 maximum loss. Then you can maybe trade 1 to 2 minis if you wanted to, but still you have to be cautious because that's not a whole lot of drawdown. I would still recommend using the micros until you build up enough cushion to where you can then scale up to a larger position size. But if you're trading that 50K account, you have no reason to be trading minis because you're just going to blow the account. You're not giving yourself enough room to be wrong before you're right. The second reason most traders fail their funded accounts is because they try to rush the process way too much. And this goes back to position sizing because when they tend to size up, they're trying to rush the process, right? If you're rushing the process, you're not thinking about the longevity of the account, how you can maintain the account for a long period of time, you're going to make really bad decisions. And rushing the process is that one-way ticket to making a bad decision, sizing up when you shouldn't, and blowing the account and having to start all over again. Don't fall into the trap of I have to pass these funded accounts right now. I have to make all this money super, super fast. The market's not going anywhere. You have all the time in the world to make this work. Focus on being a good trader first, and then that money is going to follow. Follow your rules. Don't rush the process. Have a plan, have a strategy for you to then pass the combines and then actually maintain and hold your XFA accounts or your funded accounts, whatever it's called, through whatever prop firm you go with. There's something to be said about how a house is built, right? No house was ever rushed. A house needs a good, strong foundation to stand for a very long period of time and to be safe for a family to live in. The same goes for a trading account. You have to build a foundation slowly and securely to maintain the account and not blow it in the first week or a month, right? You want to make sure you build that strong foundation. Don't rush it. Have a strategy, have a plan, and build that cushion so then you can then scale up later on. Going into the third reason why, which also ties into the second reason, is thinking so short term and not thinking for the longer term, right? Like I said before, the market isn't going anywhere. This market is going to be here for the rest of your life. You have a long, long time to be a good trader, to make things work, to figure out things the right way, to to set you on the right path to becoming a successful and profitable trader. If you start thinking so short term, you're going to start trying to make fast money, and making fast money in the markets can work for a short period of time, but then the reverse can also happen. The opposite can also happen, to where you lose fast money, right? You can make fast money, but you can also lose fast money, and you can lose more fast money than you make fast money. And that's typically how it works. You don't want to rush this. You want to have a long-term outlook on being a day trader. You have all the time in the world, so why rush it, right? Focus on being a good trader, making good decisions, hone in on your emotions, your discipline, your patience, and let the market come to you, right? All it takes is one trade a day to make basically a mortgage payment, right? You can make, one trade a day and still do $500, $600, $800 a day, right? All it takes is that one trade. You just sit back, be patient, wait for that one setup. I'm not saying you're going to do that every single time or every single day. You're going to have a day where you take a wrong entry, get stopped out, and it runs in your favor after it stops you out. It happens to the best of us, happens to every single trader. So you're going to have losses. But it does only take one single trade to make your entire week, right? So just sit back and be patient. There is no hurry. You don't have to take thousands of trades a day or hundreds, whatever trades a week. You don't have to do that. Sit back and be patient. Let it come to you. Think long term. I only need one trade a day to make my entire year, right? You can literally make your entire year in 1 month on one trade a day. So why feel like you have to rush this? You don't. There is no rush in this market. Take your time, be patient, and think long term. The fourth reason is probably one of the bigger reasons I think most traders fail their evaluations or their prop firm funded accounts, and that's the lack of emotional attachment to it. You're not trading your own money. Let's get that out of the way. You're not trading your own money. You're trading somebody else's money. And so even if you build up that account, it's not money you're losing, though you have money in the account. So you could say you're losing that money that's inside of the account, but you're really not out anything other than what you paid for the combine. So you can always go back and reset and try it again, right? Treat it as if it's your own capital. Trade as if this is your own hard-earned money that you put up at risk and that you don't want to lose. Think capital preservation, right? Your emotions, starting out, your emotions aren't attached to this money because it isn't yours. You are trading somebody else's. And so you lack that emotional attachment, which then can lead to less discipline, less patience, and start trying to force things because you know that if you mess up, it's going to be okay. You can always try again, right? But if it was your own capital, your own hard-earned money that you kept losing over and over and over again, you wouldn't have that luxury of restarting because you would eventually run out of money, right? So if you think of it as if, wow, like this is my own money, I put this in my account, I am putting my own hard-earned capital at risk here, and start thinking capital preservation. How do I keep my money? How do I preserve my capital and not make stupid decisions and blow the account? You're going to then start making better decisions, start thinking like a trader and having patience and strategic entries and exits and stop losses. And you're going to think how you should be thinking to become a successful trader. It's going to instill that discipline, that patience, and it's going to help you every single day get better and better and better. Just remember that having rules is one of the most important parts of being a trader. And so if it was your own hard-earned money, you would probably have stricter rules on yourself. So keep that in mind when you're trading prop firm accounts. Have rules. This is your money. You're building your future right here, right now. Stick to those rules and see what you can do for the long term. I hope you guys enjoyed that video. If you did, be sure to smash the like button down below and subscribe to the YouTube channel, get more daily content, guys, and I will see you in the next video. Cheers.